Everybody. C. Ray Brower here today with Jose Molina from the Jose Molina Loan Team, and we're going to find out how he ended up at the Jose Molina Loan Team, a lot about him, and everything else coming up next. All right, and we're back. Hello,
Hmm.
Jose. How are you today?
I'm great, thank you. How are you,
Good,
Siri?
good, good, good. Yeah, I was thinking back. What's it been like? 13 years we've known each other.
Yeah, I think north of 13. It's been a long, long time. I tell you, time is
It
just
has been a
flying.
long, long time.
Mhm.
Yes, it has. But
Yeah,
originally, you were with Summit Funding, and prior to me knowing you, you were actually a hard money lender, right?
yeah. A little history. In 1991 is when I got into hard money financing with a company called Stockton Mortgage, from
Hmm.
91 till 97, and then in 97, I wanted to come clean and not be that blue suede shoe guy, that was always charging you a really high rate. But of course,
Right,
those clients are a specific breed, and so that is a niche market. And so in 97, I joined Wells Fargo, and I worked for Wells Fargo for 10 years, from 97 to '07. And then from there, I went with Summit Funding, who I just resigned from about a week and a half ago, 2 weeks ago. So 16 and a half years at Summit Funding as a mortgage banker, 26 and a half years in as a mortgage banker. So that's my little bit of history there.
right on, right on. And now you are Team Molina Home Loans.
Yes, Team Molina Home Loans is my new LLC. I am partnering up with Secure Choice Lending, or better yet, it's Team Molina Home Loans, powered by Secured Lending. Um, so they are basically the broker of record, and and you know, I've been a banker for so long that I don't even know how to behave outside of that world. But
Right,
I'll share with you why I'm kind of jumped over from the banker world to the broker. And if you could picture, the mom and pop ice cream shop that just has strawberry, vanilla, and chocolate, and then you got 31 flavors that moves in next door. I mean, who do the kids want to go to work for? Right?
right,
Not the mom and pop. They want to go to the 31 flavors. So that's kind of how I felt with Summit Funding as a mortgage banker, that they had me pretty much limited with the type of products that I could offer the client. And
right,
as a mortgage broker, it opened up Pandora's box to possibilities. I'm talking from just basically being limited to FHA, conventional, VA, down payment assistance, that little sector of programs that I was used to. Now I'm able to do hard money financing, um, land loans, uh, construction, fix and flips, and so those, in chattel loans, which are mobile homes. Those are programs that if I had got a call from a client that needed that service, I would have to literally refer them out.
right. So you can even do mobile homes now.
Yes, they're considered chattel, and that's the only word that I remember from my real estate school. Chattel is just another fancy word for personal property.
Right,
And so mobile homes, and I'm not talking about the trailer mobile homes that you're thinking about, that just automatically popping up in your head. It's like the San Jose, Santa Cruz, they've got their mobile home parks, they've got some pretty nice setups, and they could be as much as 250, $350,000 for a mobile home.
Right.
Typically, they're double wide, and they're sitting on blocks, but they're paying rent to the mobile home park space.
Yeah. So, like out at Tower Park, you're actually buying land, but when you're in San Jose, you are actually renting the land, right?
Yes, it's the only affordable way for someone that can't quite buy or qualify to buy a $700,000 house. So you're just kind of stuck. You kind of pigeonholed, in that price point, that you can't really work out of unless, of course, you've got a seven-figure job.
Right. Right.
Yeah.
Well, very good. So, now that you're there, private money loans, hard money loans, uh,
Yeah.
people probably want to know what those are.
You know, so when people hear hard money, private money, there's a concept in their mind that they're thinking maybe, what is that? It's so
Right.
foreign because but being in the hard money space for 7 years, what I know it to be is that it's typically run by smaller companies or mid-sized companies that have a group of several hundred investors that basically choose to invest in a property that someone wants to borrow against. So an example would be, I'll tell you exactly what how that looks like. I when I first started in '91, my first um, loan that I did was for a young man that had inherited a property from his grandmother, and he was a student, and he basically, he called and said, "Hey, can I get a loan?" And I'm like, well, I don't know. I mean, you don't have a job, but you have a house. And so the hard money world offers you an ability to borrow money based on equity and not so much based on your income. And so in this particular case, this young man had a $150,000 house that was free and clear. He wanted to go back to school, but he didn't know how to figure it out. So we kind of brainstormed a little bit, and I told him, I go, look, I go, here's what we can do. We can lend you, we can lend you $100,000 on your property, but what we're going to do is that we're going to earmark 3 years worth of payments to the investor so that you don't have to worry while you're in college, to have to make that mortgage payment. So all you can do is just concentrate on your schooling. We'll give you some extra cash for your housing expenses and for a new car. And so that's the way I structured it. And he had no job, C. Ray. He had no job, but we came up with a solution. Now, of course, he had to pay a 12% interest rate. He had to pay high fees. And so if people hear of discount points, well, a hard money lender charges up to 4 to 6 discount points. So what is the discount point? It's 1% of your loan amount. So if you borrow 100,000, one discount point, 1,000, six discount points, $6,000 to borrow 100. So if you compare it to a normal bank, a bank doesn't charge you discount points. So, so it's and so when and the way that looks like on the investor end. So let's say, CRA, you had $200,000 in the bank, and then I'm the account executive for this private mortgage company or hard lending company. I'm calling you and say, hey, CRA, check it out. I've got this young man. He wants to borrow 100,000. The house is worth 150 to 200,000, let's say, and he needs to borrow 100,000. He's willing to pay 12%. Can you drive by the property, see what you think? And in your mind, you're thinking, well, you know what? I'm going to drive by the property. And if I don't mind owning it, if I have to foreclose on it, then I'm going to invest in that. But of course, you drive by, you do your due diligence, you drive by the property. And if you say, you know what, that's a cute house, I wouldn't mind owning it. Of course, that's the mindset. but
Right.
that's an investor's mindset. And so you're saying, hey, Jose, I like this property. I like the profile. I like how you're structuring it. How I'm going to get 3 years payments guaranteed. Let's go ahead and I'll fund that with $100,000. Cool. So then that becomes basically an investor funded private money transaction. And,
Very,
and,
very
and
nice.
so, yeah. And so basically that's just kind of one transaction. And then there's times when, if you've got a $300,000 loan and a $600,000 value, it could be that we might open it up to several investors, up to 10, where they all can come in with a tenth, as a portion of their investment for
Oh,
that
okay. So sometimes it's
300,000.
actually more than one investor investing in
Mm-hmm.
that property. It could be two, three, four, five, whatever.
Yes, sir. Yes, sir. Yeah, and it's kind of cool because the example that I'll post is that, if you've got, let's say, 10 investors, and the borrower never makes a payment. Of course, the private lender has to initiate, you know, uh, um, um, the late fees, the late payments, and then they have to initiate the foreclosure process. So when
Right.
they initiate the foreclosure process, they have to collect the money from the investor. So it'd be a tenth from each investor, to pay for the foreclosure process.
Right.
And so once all that has taken its toll at the end of 6 months after they hadn't received payments, the property either goes to foreclosure on the county courthouse steps, or the investor, worst case scenario, they end up foreclosing and taking the property, fixing it up, selling it, and making even more money. So it's a pretty good deal.
Yeah. Yeah. So, is a foreclosure from a private money investor, hard money investor, the same on your credit as a regular bank?
No, private lenders do not report to the bureau.
Okay.
And the only thing about it is that if you're trying to apply for a regular mortgage with, let's say, Bank of America, and you tell them, well, you know what, I own this property, and I want to refinance. If you've been late, they still have to do their part and get a mortgage rating, because it's not going to show up on your credit report. So if you've
Right.
been late, the private mortgage banker or private mortgage company, they're going to basically telling you, and you're going to get a bad mortgage rating, if you've been late. And so even though you're not showing late on your credit report, you might be better off not saying that you own a property for the most part. But when when banks, when you're doing a loan with a regular bank, they'll do a deep dive and they'll find out that you own real estate. So
Right.
you're kind of get caught in the middle.
Yeah. And
Yeah.
that's called mortgage fraud, isn't it?
It is called mortgage fraud, and unfortunately, people don't see it as a big deal. But if you and I are in a transaction and we know what the customer's intent is, then we're co-conspirator. Is that what you call it? When you're basically you're a part of the transaction, and your license
Right.
is at risk.
Yeah. Nobody wants to be in trouble, right?
No, 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 no. I've had my license 36 years. I think I want to keep it.
Yep. Exactly. Exactly. So,
Hmm.
you and your bride are doing a little bit of flipping too now, I see.
Yeah, I've been blessed. Sire, in about 2 years ago, I took out my 401k money, through. And I was able to transfer it into a corporation, and not have to pay taxes on that. And so when I took that money out of my 401k, I was able to use it to buy a property, cash. I'll tell you real quick. I bought a house in Stockton for 210,000, and then I partner up with a contractor, and the contractor agreed to do all the work, um, all the rehabbing, and all the costs of the materials. And basically, we put the property back on the market, and of course, he'd get his cost of rehabbing the property, and then whatever was left over from the profit, we would split 50-50. So that seems to be working for us.
It does work well. It does work well.
Mm-hmm.
Yeah, I know a lot of guys doing that right now. A lot of
Yeah.
guys doing that right now, for sure. Very
It's
good.
funny.
Very
Yeah.
good.
Yeah. And
And of course,
and
you got to make sure and keep it straight because you can't run fast enough to get away from your bride.
no doubt. Yeah, no, I can't run that fast, man. She runs every day.
I know, marathon runner she is.
She has a marathon 26.5 miles. She's done 3 or 4 of them. No, thank you. I think that is basically, it takes a certain type. And she's been running since we've been married. And we're coming
right.
on 19 years here, August 21st.
You've been married how long? You broke up there.
Yeah, it'll be 19 years, August 21st.
19 years, August 21st. Very nice.
Mm-hmm.
31 years, September 29th.
Oh, wow. Yeah, that's nice. Yeah, my one and only bride, and that's where it's staying.
Yeah. Yeah. Very, very cool. So what else is going on in the mortgage industry right now? Have you got any tips or ideas for anybody that could help them out?
Yeah, here's the deal. Here's what I tell my borrowers that are apprehensive. In fact, I had a meeting with one yesterday, young lady and her young husband. They're buying a property from their uncle, and the payment is $3,000 a month for a $400,000 house. And when I saw her kind of cringe a little, she was like, "Oh my gosh!" But they qualified just fine. I told her, I go, "Look, Carla, I go, don't pay. I go, don't get married to the interest rate. I go, you're getting a 6.625 rate, but this is just temporary. You're getting into the marketplace, and what's going to happen when the rates drop? Property values are going to go up, because the lower the rate drops, the more the consumer can afford. And of course, when the rates drop, everybody wants to be a homeowner. And what happens when we supply and demand is a problem, then all of a sudden the property values go up. So if you're buying right now and you're paying a high rate, go for it. Don't be afraid. And just in a year and a half is the most that you'll have to sacrifice. But the sacrifice will definitely be worth the process, because when the rates drop to 3.5%, 4.5%, even 5%, and you drop your payment 1.5% to 2%, you're going to see an improvement in your payment between $400 to $600, depending on your loan balance.
Right, exactly. And depending upon the appreciation rate in that couple of years, might get rid of the PMI also.
Yeah, for sure. And like I was telling you that the dynamics of the rate decline and the price, incline, it's not, it's going to happen. It's going to happen. I mean, we have a major lack of inventory right now. The only reason that people are not, jumping in swarms, it's because there's only a small percentage of people that can afford to step up to the plate on the higher price points.
Right, exactly. The higher price points right now with the higher interest rate has taken out the bottom side of the market. And of course, the gloom and doom that we hear on the news, it's telling us, oh my God, things are horrible. And for those on the bottom side of the market, it is. But people that can actually go out and afford a payment, it really is a great time for sellers to sell, and not as bad a time as it was during those unicorn years of 21, 22, where we were seeing 15, 20% appreciation rates that were driving 30, 40 offers at a time, way over asking. So I think right now is a great time to get into the market, like you said, because election year's coming up, and they're not going to let that interest rate stay as high as it is in the
No,
upcoming
no.
election?
They've already said that they're pretty much done. Increasing the rates. I think they might have another eighth of a or a 1/4% jump, but then that will
Yeah,
be it. And then we're going to be seeing a decline in the next 12 months. Um,
right.
Before we run out of time, I wanted to just touch real quick on the bank statement program that we have, and this is huge for self-employed individuals, contractors, uh, truck drivers, anybody that basically deposits large amounts of money into their business banking account. If they are filing their taxes and are filing their taxes so that the income that they're actually paying taxes on is not enough to qualify to buy a car,
Right.
that's the client we want to hear from. Because if you are self-employed and let's say hypothetically you deposit an average of 50, 70, $100,000 a month into your business, and it's very likely, it's very possible that a lot of people do, but at the end of the year when you go to file your taxes, you only put down that you made 100,000, so you can only have to pay taxes on the 100,000. Well,
Right.
what's really cool about the bank statement loan is that if you deposited $500,000 over a 12-month span, what we'll do is that we'll take those deposits and divide them into 50%, or we'll call it what we call this a 50% expense ratio. So we'll split it down the middle. So that leaves us what, 250,000?
Right.
So 250 divided by 12, that pencils out to about $18,000 to $20,000 a month in income. So when you compare that to $100,000 a year in income, or 9,000, that's a big swing in income that you could use to qualify to buy your home. So bank statement loan programs are amazing, and you don't even have to have had filed your taxes. It's
You don't even
crazy.
have to what?
You don't even have to have filed your taxes. I did a loan for a gentleman that was a CPA that didn't do his taxes for the last 2 years, and I still closed his loan with bank statement deposits.
Right.
It's
Wow.
amazing.
That
It's
is
crazy.
amazing. That is amazing. Wow. Well,
Yeah,
by
yeah.
golly. So that is for anybody that's basically self-employed or a 1099
Mhm.
employee that's putting lots of money into the business account, their LLC, their corporation, whatever it is, and showing a minimal amount of money on their actual personal income, even though they're got all the write-offs and everything on the business. You're taking 60%. Was that right?
We're taking 50% of the total deposits.
50% of the total deposits. Okay.
And,
Okay.
and, and the wild thing about it, CRA, is that if the CPA can tell us that their expense ratios are only 30% or 20%, then we can use up to 70% of that 500,000 and divide that by 12, which ends up being a higher amount.
Oh, wow. Okay.
Hmm.
Okay. Very interesting. Very interesting. Well, that's great. That's great news for a lot of people.
Hmm.
Great news for a lot of people because regular banks definitely only look at that tax return.
Yep. If they don't see it, they don't believe it.
Yeah. Yeah. Exactly. Exactly. Well, Jose, I appreciate you being on. I hope we can do this again in the future. Thank you so much,
Absolutely.
everybody. Jose Molina with Team Molina Home Loans. His information's been scrolling across down the bottom there. If you want to give a shout out on it yourself, Jose, you could do that.
Thank you. Thank you. Yeah, appreciate it. And we'll circle back again, sir.
That sounds good. Everybody go out and be the sunshine in somebody's rainy day. Remember, see Ray to find your perfect home, and we will talk to you all again real soon. Thanks again, Jose.